Good morning, Jax. This is Fahad. Today is Tuesday, September 22nd. Let's get started. First, a quick note. Um, 2 weeks ago in webinar, we recommended buying this is a stock called Fulgent Genetics, FLGT. And we recommended buying this stock and also selling way out of money, like 40% out of money, covered calls against it. Simply look, here is the trade idea on September 3rd that was presented. Big discussions on Fulgent Genetics. So buy the stock at 33 and sell October 45 covered calls. This stock is now trading above $40 per share in pre-market. It's up 10% and continues to rebound nicely after building that base. There was a power candle yesterday, and there's going to be another power candle today, and it's most likely going to fill this gap all the way up to $43 per share. The reason for the pre-market rally is that stock is being added to S&P 600 small cap index. That's the S&P 600 small cap index. So that's positive for the stock. And given the under the radar high growth name, I still think it's going to even continue higher even from there and gradually return to new 52-week high. So nice little trade that is going for us. Now, moving on, one stock only that I want to discuss is Eli Lilly. I first of all really like the technical setup over here. The stock has pulled back on light volume, and if you notice for the past couple of weeks or so, the volume has started to build with ever rising elevated share volume. Nice building formation, base building formation, and in the last couple of days or so, this is acting like this wants to leave this VOP congestion level, and if so, a move above yesterday's high. Yesterday's high was 154.50. If it takes out 154.50, I think this easily moves up to about 161. So that's on a percentage base, about 3 to 4% move in the stock. But considering that this is a big cap pharmaceutical and always have low volatility and rather very cheap options, even though it's only 3 to 4% move on the stock from here as a breakout from the base, that should be sufficient to make plenty of money on call options if you can capture that move. And then we'll see at that point if it still has the firepower to actually go all the way up to mid 160s or maybe as high as new 52-week high of 170. But I really like the technical basing formation over here. The reason fundamentally also I like is because there's an update out. The company recently announced a drug called Retevmo, which was launched for tumors, cancer tumors. And so there is a note out from Bank of America that talks about how this growth is actually accelerating. So I'm going to quote over here. While core oncology products, including Alimta and Cyremza, continue to represent more than 50% of current oncology franchise revenues, Verzenio contribution is increasing, growing 63% year over year, driven by higher TRX share in the metastatic settings, 9% to 13% market share, and particularly strong in Japan, where the company has 58% of the market share. Retevmo's launch is also off to a strong start, with first quarter sales expected to be reported during Eli Lilly's third quarter earnings report, which is going to be next month. And while RET test continues to be the key variable in Retevmo's launch success, according to Eli Lilly, initial physician feedback has been strong, with first to market momentum and an unmatched clinical profile sufficient to cement Retevmo as a class leader. This is a very, very powerful statement. So consider this: 63% growth year over year based on the TRX share in Verzenio. And then also the overall company's market share globally has now increased just in the past couple of months from 9% to 13%. And in Japan, it is strongest at 58%. And lastly, Bank of America this morning is talking about that the physician feedback has been very, very strong for Retevmo since it's the first drug of its category to reach the market. So the momentum is building with no competition. And the third quarter earnings that will be reported in about a month will be the first quarter when we will get to see Retevmo earnings profile actually. So All of this is telling me with the stock having pulled back, we're going to see sharp, strong earnings reports, positive commentary on the outlook as well. And as a result, this looks really attractive here for a gradual move higher to $160 to $175 per share. That's it from me. Jay?
Morning, Fahad. So today, taking a look and providing an update on Kornit Digital, ticker is KRNT. First of all, this was a name that actually finished green yesterday, and that is most likely due to the fact that Citigroup upgraded it from neutral to buy. But also, this was a name we covered recently in conversations back on August 24th. For those that do not know, this is a digital printing solutions company. And one of the items we talked about last time was more so from a product standpoint, how Kornit expects to produce more of its Atlas DTG or direct-to-garment systems in Q3 than all of last year, with significant volume potential in Q4, and then momentum appears strong as well for their other product lines, such as the high-volume Vulcan Plus DTG system and their Presto direct-to-fabric printer. So that's basically what we talked about last time. The update is, so last week, the company completed a follow-on secondary offering of 4.69 million shares at $56.50 per share. Now, in tandem with this offering, it also entered into a new transaction agreement with Amazon, under which Kornit will issue a warrant to Amazon to acquire up to 3 million Kornit shares at a purchase price of $59.26, subject to vesting as Amazon purchases up to $400 million of Kornit's products and services over a 5-year time period. Now, Needham was out with a note yesterday highlighting that there are 2 components to the new agreement with Amazon, one covering the purchase of $250 million of existing products and services, and then more importantly, the commitment to purchase $150 million of new products and services. And these products are most likely presumably on Kornit's, quote unquote technology roadmap. And this is going to enable Amazon to extend Kornit's digital printing technology beyond the current partnership with Merch by Amazon to include Amazon Fashion, which already ranks as one of the largest fashion retailers. And if you were curious, as of Q2, Amazon represented 9% of Kornit's revenues. So just a little quick update. And I think their next catalyst should be earnings for Kornit sometime in November.
Yeah, so I'm doing some rough math in my mind. The company does, but I guess we have to look at more normalized rate before COVID. But I believe based on the numbers I'm looking at, the company does about $200 million, between $150 to $200 million in annual revenues. Mm-hmm. And this contract alone with Amazon is $450 million?
400
million. Yeah. And when they were doing about $200 million in total revenues, Amazon represented 9% of the total revenues.
As of Q2.
As of Q2. And the 400 million, 150 of that is all fresh new business. So purely just from optics standpoint, that 150 million new piece alone as a percentage of total annualized revenue run rate is 100%. I'm just wondering, did the forward revenue expectations just shot up to the moon here based on this new major contract with Amazon, potentially going from a total annual revenues of 200 million all the way to 600 million? But I guess some of this is repeat business because Amazon is already a customer. So maybe from 200 million to 500 million, still, that's huge. Very, very big. Interesting update over there. Didn't know about this. Citigroup also upgraded the stock. Looks like it from neutral to buy. Last week or over the weekend on September 20th. So let's see if this thing breaks out through $60 per share. There's a technical resistance here, and if so, we might see actually a run back to new 52-week high. Great stuff. Appreciate it. Chronicle.
Morning, everyone. Positive update on VIAV Solutions this morning, symbol VIAV, which we continue to be bullish on. I've been long comment since June, planning to add once the price action shows improvement. Honestly, this recent sell-off has been driven more by emotion and fears regarding Ciena's recent earnings rather than VIAV's own fundamentals, because the latest commentary from the company continues to be strong. And I have to stress, this is positive commentary coming from a management team that has been notoriously conservative in the past. Specifically, Needham hosted a call with VIAV management last week. This was the first time we heard from management since earnings. And after that call, they were out with a bullish note, reiterating buy and a $16 price target. And there are plenty of positive takeaways here. First off, and most importantly, unlike Ciena, VIAV told Needham that they are not seeing a slowdown in July, August, and into September. In fact, VIAV's service provider business is not only on track, but is also showing a few areas of strength, especially in their OSP and 3D sensing segment, plus broadband-related sales in rural areas. So despite what the market thinks, just because Ciena is reporting bad numbers and guidance doesn't necessarily mean VIAV is going to disappoint. In fact, management is now expecting the OSP segment to run ahead of target for the back end of the year. And this is partly because of their banknote business, with countries burning down their currency inventories, and now there's a need to replenish. As a result, VIAV said that they appear to be in the early stages of realizing this pent-up demand. And it's also important to note that this is a high margin business. And now here's the other important thing. VIAV management also told Needham that they are seeing demand. They are seeing demand in the OSP segment to report strength for the next 4 to 6 quarters. And so they're expecting both revenues and margins to continue improving over the back half of this year and 2021. On top of that, as we get into next year, the company will be coming up against easy comparisons in their service provider and OSP segments. So the remainder of this year is looking better than expected, plus next year is going to be a very strong year. And if we want to look even further out, there's the ramp in 5G field testing that's expected to take place in 2022. Meanwhile, over in China, China Mobile, which is the largest telco and mobile network operator globally, China Mobile is now talking to VIAV about field instrumentation and testing solutions. Right now, it's just lab testing, but down the road, VIAV is likely to see field testing business from China Mobile. So, putting everything together, I don't understand the sell-off. Like, if we look at the diagrams I shared in the chat, VIAV is a company with a very strong moat and leadership when it comes to network and equipment testing, plus 3D sensing. And the stock is currently trading as if 2021 is going to be a very bad year when it's the opposite. So we're remaining bullish.
In big theme, because we have made this this was a former Jaguar topic in the quarterly outlook. This has also been rumored to be a potential M&A target, although the jury is still out on that. A big case that we have covered around this is really around 5G. So I'm going to go to the third point as the most important one that I believe has always stood out for me in terms of this company. I believe that there was a moment when COVID led disruptions for a quarter to two in the second quarter and the third quarter, put off a lot of capital spending that was supposed to happen around 5G platform. But then starting from the summer months, June, July, we started to see a lot of that CapEx start to come right back because there's a pent-up demand and the companies are continuing to build out the platform. So we saw Marvell technology start to quickly take off as a result. And we saw NVIDIA and we saw other Taiwan semis started to take off and all of those. Now, I understand that this is very different than all of them, but generally speaking, there has been a rising, improving CapEx trend environment for the last couple of months. At some point, I would assume that that's going to translate into better sequential improvement. And to your point at the top of this, that July and August actually have been robust. It sounds to me that that's actually indeed really happening. Would you agree with all of this? And if so, I guess my question is that, do you think we're going to start to see really better and stronger year-over-year growth by the end of the year?
Yeah, I would agree with that. I understand that all this stuff that they told Needham, it's mostly qualitative, but with CEO Oleg Kakin, what he says is usually what you get.
Yeah. Yeah, most important thing is CapEx trends. Watch the CapEx trends in its end markets for this company, and that will be the clue whether we're starting to see much better improvement in front of us or still sluggish environment like the way we saw in the second quarter. But you know what? I continue to like this name, and I continue to believe this is very depressed name. We currently have a position in this. Hopefully that will work. And let's see, technically speaking, if this starts to take out with a new leg higher, take out about 1230, and if so, we get to 13. Major VOP resistance there if it clears that, and then it has a shot at all the way to $15 per share. Good stuff. Thanks for the update. That's it from us, Jax. We'll see you in the chat room shortly.